Everyone seems to be calling it a market shift. So what does that exactly mean in today's real estate market? Well, let's find out. Now, if you're thinking about buying or selling a home, or you're not, you've probably been hearing this term housing market shift being thrown around a lot lately. So what does that actually mean? Does it mean that the sky is falling? Or is it just a nicer word instead of a market crash? So let's see what the difference between a market shift and a market crash is. A market shift is a gradual decline in prices to more sustainable levels, whereas a market crash is a drastic drop in prices caused by panic selling from homeowners or investors, or there's just a lot of power of sales or foreclosures taking place in the market. When we look at the peak of the market in March and look at the current market a couple of months later, we are seeing a decline in prices. However, on a year-over-year basis, there's still positive gains. So let's take a look at some of the numbers that are taking place. Let's start off with Aurora Region as a whole. So we'll look at the average price for all the homes. The average price for the month of May of 2022 was $1,369,657, whereas in March, the average price was $1,515,897. So when we look at the price difference from March till May, there was a 10.6 decline in the prices. But when we look at the prices back in May of 2021, the average price was at $1,294,000. So year over year from May 2021 to May 2022, there is still a 5.8% increase. So now let's look at some individual areas. We'll start with Aurora. The average price for a home in Aurora was $1,443,700, whereas in March, that average price was at $1,614,300. So there was a price drop of 11.8% for those couple of months. But when we look back on May of 2021, the average price in Aurora was $1,247,200. There's still a year-over-year 15.7% increase. Now let's look at Newmarket. The average price for a home in Newmarket was at $1,190,400, whereas in March of 2022, the average price was at $1,381,800. So there was a price drop of 16%. But when we look at the year-over-year numbers from May of 2021, the average price at that point was $1,047,900. So there was still a 13.6% increase. And lastly, we'll look at the numbers in Richmond Hill. The average price for May of 2022 was $1,490,900, whereas in March of 2022, the average price was $1,685,600, and that was a decrease of 6.3%. Whereas in May of 2021, the average price in Richmond Hill was $1,361,600, and that was an increase of 11.6% year over year. So it seems that the market is not crashing, and it certainly doesn't seem like the sky is falling, but we are seeing a shift in the market, and we really needed that adjustment as the market was just not sustainable the way that it was going. We are also seeing a shift in less measurable kind of things on a day-to-day basis, such as less people going to open houses, pickier buyers sitting on the sidelines, no more crazy multiple offer bids, price reductions, and fewer visitor showings. However, homes are still selling, just not at the crazy pace that we were seeing a couple months ago. Homes that are well prepared, that are staged and marketed properly, are still selling above asking price with multiple offers. So it's really important at this stage, if you are a seller, to have a well-prepared home. So fix minor repairs, do a lot of painting, cleaning, a deep clean, and especially a stage. You need to stage your home. Statistics show that a home sells for another 5 to 8% if it is professionally staged. And of course, your home needs to be marketed properly. Your home needs to stand out from the rest of the competition, so having the right type of marketing is really important. And of course, finally, is pricing it properly. The prices keep changing on a daily basis, so it's important to have the proper pricing strategy. Now, if you're a buyer and you're still waiting for the market to keep dropping, don't wait too long, as now might be the perfect time for you to get into the market, as there aren't those crazy multiple bids that we were seeing. So you have a little bit of leverage, so you can place an offer subject to certain conditions. Of course, financing and a home inspection are the most common ones. Now, if you're a buyer, I would suggest to take advantage of the current market, as there are a lot of buyers that are still on the sidelines. But that might change once buyers get used to the rising interest rates, as housing demand will be supported by extremely low unemployment rates, low job vacancies, rising incomes, and of course, a record immigration. Now, if you have any questions about the real estate market or are curious to find out what your home could be worth in today's market, feel free to reach out to me. I'd love to hear from you. Thanks for tuning in, and I'll see you here next time. Take care.